Before you place your next trade, you need to hear this. Every trader wants control, but control is what destroys them. You felt that panic. The chart moves against you, and your brain whispers, "Do something, anything." Your finger hovers over the buy button. Your heart pounds. Logic screams stop, but emotion screams louder, and you click. Today you'll finally understand why your brain trades against you, why the same mind that can analyze complex patterns becomes your worst enemy the moment money is on the line. This isn't about discipline or willpower. This is about rewiring the neural pathways that have been sabotaging your trading since day one. I used to blow accounts like clockwork. Not because I didn't understand the markets, not because I couldn't read charts. I blew accounts because I was fighting a war I didn't even know existed. A war between two versions of myself. The rational trader who made perfect plans, and the emotional trader who destroyed them. The statistics are brutal. 90% of retail traders lose money in their first year. 70% experience significant losses that impact their real lives. Bills, rent, family obligations. But here's what those numbers don't tell you. Behind almost every successful trader's story lies a narrative of devastating setbacks, followed by remarkable recoveries. The difference isn't talent. It isn't luck. It's understanding the invisible enemy that lives inside your own skull. Your brain is not designed for trading. It's designed for survival. The same neural circuits that kept your ancestors alive are now actively working against your profit targets. Every tick against your position triggers ancient alarm systems. Every winning trade floods your system with chemicals that make you reckless. You're not trading the market, you're trading your own biology. And until you understand this, you'll keep making the same mistakes over and over again. Let me show you exactly how this works. Picture the last time you took a significant loss. Not just a small stop out, but a real gut punch that made you question everything. Remember that moment when you first realized the trade was going wrong. Your chest tightened, your breathing changed. Time seemed to slow down. That physical response isn't weakness. It's your amygdala, the brain's alarm center, flooding your system with stress hormones. In milliseconds, rational thought gets hijacked. Your prefrontal cortex, the part responsible for planning and decision-making, goes offline. You're no longer a trader making calculated decisions. You're a frightened animal looking for escape. This is the hidden loop that destroys accounts. Fear triggers panic. Panic triggers poor decisions. Poor decisions create losses. Losses create more fear. The cycle repeats until there's nothing left. You're not broken. Your brain is just wired for survival, not for staring at red numbers on a screen while your life savings evaporate. The same fight or flight responses that helped your ancestors escape predators now cause you to panic sell at market bottoms or revenge trade after losses. But here's where it gets really insidious. Your brain doesn't just react to losses, it reacts to the possibility of losses. Every time you place a trade, even before the market moves, your neural pathways are already preparing for threat. You're trading in a constant state of low-level anxiety, making decisions from a place of fear rather than logic. And then there's the other side of the equation. When trades go in your favor, your brain releases dopamine, the same chemical that creates addiction to gambling, drugs, and social media. Suddenly you feel invincible. You increase position sizes, you ignore risk management rules, you start believing you've figured out the market. This euphoric state is just as dangerous as panic, maybe more so, because while fear makes you obviously emotional, overconfidence feels like clarity. It feels like skill. Your brain tricks you into thinking that temporary success equals permanent mastery. The cruel irony is that both emotional states, fear and greed, create the exact same outcome. Poor trading decisions that destroy capital over time. You lose money when you're scared, and you lose money when you're overconfident. The market doesn't care about your emotional state. It rewards consistency and punishes emotional reactivity. So how do you trade when your instincts want to destroy you? How do you make rational decisions when your brain is actively working against you? The answer isn't what most traders think. It's not about controlling your emotions. That's impossible. You can't just decide not to feel fear when your account is bleeding. You can't willpower your way out of greed when dopamine is flooding your system. The answer is about understanding the difference between reacting and responding. When you react, you're letting unconscious neural patterns drive your behavior. When you respond, you're creating space between the stimulus and your action. You're engaging the prefrontal cortex, the thinking brain, instead of just the emotional brain. Take a breath, because what comes next might change how you see the market forever. Your brain processes trading decisions through multiple competing systems. The limbic system, your emotional center, operates on survival instincts. It's fast, automatic, and incredibly powerful. The prefrontal cortex, your rational center, operates on logic and planning. It's slower, more deliberate, and easily overwhelmed. When you're in a trade that's moving against you, both systems activate simultaneously. The limbic system screams danger and demands immediate action. The prefrontal cortex tries to analyze the situation rationally, but here's the problem. Under stress, the limbic system almost always wins. It's evolutionarily older and biologically stronger. This is why you can spend hours creating the perfect trading plan, only to abandon it completely the moment real money is at risk. It's why you can know exactly what you should do in a situation, but find yourself doing the opposite. Your emotional brain hijacks your rational brain, and suddenly you're revenge trading or doubling down on losses. Most traders try to solve this by increasing discipline. They make stricter rules. They promise themselves they'll stick to the plan this time. But discipline alone isn't enough because it's still trying to use willpower to overcome biology. And biology always wins in the end. The real solution is neural reprogramming, training your brain to recognize these emotional hijacks before they control your behavior, creating new neural pathways that support profitable trading instead of destructive trading. This process starts with awareness. You have to become conscious of your unconscious patterns. Every time you feel the urge to enter a trade, pause. Ask yourself, is this coming from analysis or emotion? Is this part of my plan or am I reacting to market movement? The moment you notice the impulse, you've already gained control. Because noticing means your prefrontal cortex is online. You've created that crucial space between stimulus and response. You've interrupted the automatic pattern that usually leads to poor decisions. But awareness is just the first step. The real transformation happens when you start training your brain to default to different responses. Instead of panic when trades go against you, you learn to default to curiosity. What is the market telling me? What can I learn from this price action? Instead of overconfidence when trades go in your favor, you learn to default to gratitude and caution. The market gave me this profit. How do I protect it? How do I position myself for the next opportunity? This isn't about suppressing emotions. It's about redirecting them toward useful outcomes. Fear becomes respect for risk. Greed becomes appreciation for opportunity. Frustration becomes fuel for improvement. The process takes time because you're literally rewiring decades of neural conditioning. Every time you choose awareness over reaction, every time you pause instead of panic, you're strengthening new pathways in your brain. You're teaching your nervous system that trading doesn't have to be a constant state of emergency. And something remarkable happens when you master this process. Trading stops feeling like war and starts feeling like meditation. You stop fighting the market and start flowing with it. You stop trying to control outcomes and start controlling your responses to outcomes. The transformation doesn't happen overnight. Your neural pathways have been carved deep by years of reactive trading. Every blown account, every panic sell, every revenge trade has strengthened those destructive patterns. But here's what neuroscience teaches us about the brain. It's remarkably plastic. It can change, it can adapt, it can learn new ways of being. But first, you have to understand the enemy you're fighting. Your brain categorizes every trading situation into one of two buckets, threat or opportunity. There's no neutral ground. When price moves against your position, even by a few pips, your amygdala doesn't see a temporary fluctuation. It sees existential danger. Your heart rate spikes, your palms sweat, your vision narrows. This isn't weakness. This is your survival system doing exactly what it was designed to do. The problem is, the same system that kept your ancestors alive in the wilderness is now actively sabotaging your trading account. When a saber-toothed tiger was charging, hesitation meant death. Quick action meant survival. But in trading, quick action usually means losses. The market rewards patience and punishes urgency. Think about the last time you cut a winning trade short. You had a solid setup. You entered at the right level. Price moved in your favor. But then, instead of letting the trade develop, you closed it early. Why? Because your brain started calculating all the ways it could go wrong. Your nervous system couldn't handle the uncertainty of unrealized profit. This is loss aversion in action. The pain of losing money you already have, even if it's just paper profit, feels twice as intense as the pleasure of gaining that same amount. Your brain literally experiences the possibility of loss as more significant than the certainty of gain. So you grab profits early and hold losses long, the exact opposite of what profitable trading requires. Now picture the flip side. You're in a losing trade, and instead of cutting it quickly, you hold on. You add to the position, you move your stop loss further away. You tell yourself you're being patient, but really you're being controlled by another neural program, the one that refuses to accept defeat. Your ego gets entangled with every trade. When price moves against you, it's not just money you're losing, it's validation. It's proof that you understand the market. Your identity as a trader gets tied to each individual outcome, and suddenly, accepting a small loss feels like accepting that you're a failure. But here's the paradox. The traders who consistently lose money are the ones who can't accept losing money. The traders who make money long-term are the ones who accept losses as a natural part of the process. They understand that being wrong is not the opposite of being profitable. Being wrong and staying wrong is the opposite of being profitable. This mindset shift is everything. But it requires rewiring neural patterns that have been reinforced for years. Look closer at what happens in your body when you place a trade. Before you even click the button, your nervous system is already activating. Your breathing becomes shallow, your muscles tense, your mind starts racing through scenarios, you're preparing for battle before the war has even begun. This pre-activation state is exhausting. It's like being in a constant state of readiness for emergency. No wonder most traders burn out. They're not just making decisions about market direction. They're managing a full-body stress response with every position they take. The solution isn't to eliminate this response. That's impossible. The solution is to recognize it, accept it, and work with it instead of against it. When you feel that familiar tension building before a trade, pause. Take 3 deep breaths. Remind yourself that this feeling is normal, expected, and temporary. The moment you accept the discomfort instead of fighting it, something shifts. Your nervous system begins to calm. Your prefrontal cortex comes back online. You can think clearly again. But there's another layer to this that most traders never discover: your relationship with uncertainty. The market is fundamentally uncertain. No one knows what price will do next. No indicator, no pattern, no analysis can guarantee outcomes. Yet most traders spend enormous amounts of mental energy trying to eliminate uncertainty. They search for the perfect entry. They overanalyze setups. They convince themselves they can predict the unpredictable. This quest for certainty is what destroys accounts, because when reality doesn't match expectations, when the perfect setup fails, when the sure thing becomes a loss, the emotional crash is devastating. The greater the certainty you felt going into the trade, the more shocked and destabilized you become when it doesn't work. Profitable traders have a completely different relationship with uncertainty. They embrace it, they expect it, they plan for it. They understand that uncertainty is not the enemy of profit. Certainty is the enemy of profit, because certainty leads to overconfidence, and overconfidence leads to taking excessive risks. Think about the most successful trade you've ever made. I'm willing to bet it wasn't the one you felt most certain about. It was probably the one where you had some doubt, where you sized appropriately because you weren't sure, where you managed risk carefully because you respected the possibility of being wrong. Uncertainty keeps you humble. Uncertainty keeps you careful. Uncertainty keeps you profitable. But your brain hates uncertainty. It craves predictability, patterns, and clear outcomes. This creates a constant internal battle between what your brain wants and what the market demands. Learning to sit comfortably in this tension is perhaps the most important skill you can develop as a trader. Reflect on this for a moment. How many trades have you ruined by trying to force certainty where none existed? How many accounts have you damaged by refusing to accept the fundamental uncertainty of market movements? The path forward requires a fundamental rewiring of your neural responses. Instead of seeking certainty, you must learn to seek probability. Instead of needing to be right, you must learn to focus on being profitable. Instead of fighting uncertainty, you must learn to dance with it. This transformation happens through deliberate practice. Every time you feel the urge to overtrade, you practice stillness. Every time you want to add to a losing position, you practice acceptance. Every time you want to cut a winner short, you practice patience. These moments of practice are when new neural pathways get built. Each time you choose awareness over reactivity, you're literally changing your brain. You're weakening the old patterns that led to blown accounts and strengthening new patterns that lead to consistent profitability. but the process requires something most traders aren't willing to give: time. Your brain didn't develop these destructive patterns overnight, and it won't release them overnight either. Neural change happens slowly, through repetition and consistency. Most traders give up during this phase because they expect immediate results. They practice awareness for a few days or weeks, don't see dramatic changes in their P&L, and conclude the approach doesn't work. But they're measuring the wrong thing. The real measurement isn't profit and loss. It's internal state. Are you calmer during trades? Are you sleeping better at night? Are you able to sit with uncertainty without immediately needing to act? These internal shifts happen long before external results manifest. And when those internal shifts reach a critical mass, something remarkable occurs. Trading stops feeling like a battle against yourself and starts feeling like a natural expression of who you are. You stop fighting the market and start flowing with it. You stop trying to force outcomes and start allowing them to unfold. Your identity begins to shift from someone who trades to someone who embodies the principles of profitable trading. Patience becomes natural instead of forced. Risk management becomes automatic instead of something you have to remember. Emotional regulation becomes your default state instead of something you have to work at. This is when the external results finally start to match the internal transformation. Not because you've found some secret strategy or indicator, but because you've become the type of person who naturally makes profitable decisions. You're no longer fighting your biology. You're leveraging it. You're no longer at war with your emotions. You're using them as information. You're no longer trying to control the market. You're controlling the only thing you actually can control: your response to whatever the market does. This level of integration takes time to develop, but once achieved, it's remarkably stable, because it's not based on external techniques or systems that can fail. It's based on internal rewiring that becomes part of who you are. The trader you're becoming understands something that the trader you used to be never could. The market isn't something to be conquered, it's something to be respected, understood, and worked with. Like a river that you learn to navigate rather than a wall that you try to break through. This understanding changes everything about how you approach position sizing. When you're emotionally activated, your risk tolerance becomes completely distorted. What feels like a reasonable position when you're calm feels impossibly small when you're desperate to recover losses. Your emotional brain doesn't understand percentages or risk management rules. It only understands intensity. This is why blown accounts follow such predictable patterns. After the first significant loss, traders don't just lose money, they lose their ability to accurately assess risk. A 2% position feels like nothing when you need to make back 20%. A conservative setup feels like a waste of time when you're behind for the month. Your nervous system is now driving position sizing decisions instead of your trading plan. And your nervous system doesn't care about long-term wealth building. It only cares about immediate emotional relief. The most dangerous moment in any trader's career isn't the first loss. It's the second trade after the first loss. Because that's when damaged psychology meets live capital. That's when the emotional brain takes control of the keyboard. Think about your own trading history. Can you identify the exact moment when a manageable loss became an account-threatening catastrophe? It wasn't market conditions that changed, it was your internal state. You stopped trading your plan and started trading your emotions. This pattern repeats across every asset class, every time frame, every strategy. The surface-level details change, but the underlying neural programming remains the same. Stress hormones hijack rational decision-making, and suddenly you're not a trader anymore. You're a gambler trying to get even. But here's what most traders never realize about this process. The emotional hijack isn't random. It follows specific triggers that you can learn to recognize and interrupt. The first trigger is the story you tell yourself about what the loss means. If you interpret a losing trade as evidence that you don't understand the market, your nervous system activates differently than if you interpret it as normal market noise. The meaning you assign to events shapes your physiological response to those events. Profitable traders don't experience fewer losses, they interpret losses differently. When price hits their stop loss, they don't think, "I was wrong about market direction." They think the market gave me information and I responded appropriately. Same outcome, completely different neural activation. This shift in interpretation isn't just philosophical, it's neurochemical. Different thoughts trigger different hormone releases, which create different decision-making states. The trader who sees losses as information stays in their prefrontal cortex. The trader who sees losses as judgment gets hijacked by their limbic system. Your relationship with being wrong determines your relationship with risk management. If being wrong feels like personal failure, you'll avoid stops. If being wrong feels like market feedback, you'll embrace them. Look deeper into this concept because it rewires everything about how you experience trading setbacks. Your brain processes uncertainty through pattern recognition. When market behavior matches your expectations, you feel calm and in control. When markets behave unpredictably, your nervous system interprets this as danger. This is why trending markets feel easier to trade than choppy markets, even though both present equal profit opportunities. The issue isn't market behavior. The issue is your need for predictability in an inherently unpredictable environment. Every time you try to force certainty onto uncertain outcomes, you create internal tension. That tension builds until it explodes into emotional trading decisions. Consider how this shows up in your actual trading. You spend hours analyzing a setup, convince yourself it's high probability, enter the position, and then watch price immediately move against you. Instead of accepting market feedback, you feel betrayed. You did everything right according to your analysis, so why isn't the market cooperating? This sense of betrayal triggers the revenge cycle. You start looking for ways to prove the market wrong instead of ways to adapt to what the market is actually doing. You add to losing positions. You ignore stop losses. You convince yourself that patience means holding on to losing trades. But patience in trading isn't about holding positions longer. Patience is about waiting for the right conditions before entering positions in the first place. Most traders have this backwards. They're impatient about entries and patient about exits, when profitable trading requires the opposite approach. The neural pathway that creates this confusion is fascinating. Your brain categorizes waiting as inaction, and inaction feels unproductive. When you're not in a trade, you feel like you're missing opportunities. When you are in a trade, you feel like you're finally working. But this perception is completely backwards from market reality. In trading, inaction is often the most productive action you can take. Not trading protects capital. Not trading preserves mental energy. Not trading allows you to wait for genuinely high probability setups instead of manufacturing opportunities from mediocre conditions. Your challenge isn't learning to trade more effectively. Your challenge is learning to not trade more effectively. This requires rewiring the neural pathways that equate activity with productivity. The transformation begins when you start measuring success differently. Instead of measuring profit per trade, you measure adherence to process. Instead of measuring daily returns, you measure emotional stability. Instead of measuring win rates, you measure decision quality. This shift in measurement criteria changes everything about your trading psychology. You're no longer trying to extract profit from every market movement. You're trying to express mastery through disciplined execution. The money becomes a byproduct of the process instead of the goal of the process. But this transformation requires confronting something most traders desperately want to avoid: the possibility that their current approach is fundamentally flawed, not just their strategy or their risk management, but their entire conceptual framework for what trading actually is. Most traders approach markets like a video game. They think there are rules to figure out, patterns to memorize, and strategies to master. Once they learn enough, they expect consistent profits. But markets aren't games with fixed rules. They're complex adaptive systems that constantly evolve. The strategies that worked last month might not work this month. The patterns that seemed reliable can disappear without warning. The edge you thought you had can vanish as market conditions shift. This isn't a bug in the system. This is the system. Accepting this reality is psychologically challenging because it means giving up the fantasy of control. You can't control market direction. You can't control when opportunities appear. You can't control how long trends last or when they reverse. The only thing you can control is your response to whatever happens. This sounds limiting, but it's actually liberating. When you stop trying to control outcomes, you can focus all your energy on controlling process. When you stop predicting market direction, you can start responding to market information. When you stop fighting uncertainty, you can start leveraging it. Professional traders understand something that amateurs don't. Uncertainty is where opportunity lives. When everyone knows what's going to happen, there's no edge to exploit. When outcomes are obvious, there's no profit potential. The confusion and unpredictability that frustrates amateur traders is exactly what creates profit opportunities for professionals. This is why professional traders seem calm during market chaos, while amateur traders panic. It's not because professionals have better information or superior analysis. It's because professionals have trained themselves to see uncertainty as opportunity, while amateurs see it as threat. Your nervous system's response to uncertainty is trainable. Just like you can train your body to handle physical stress through exercise, you can train your mind to handle psychological stress through deliberate practice. Each time you choose calm awareness over panicked reaction, you're building mental resilience. The practice isn't complicated, but it is challenging. When you feel the urge to act impulsively, pause. When you want to check your positions obsessively, breathe. When you start calculating unrealized profits or losses, redirect your attention to present moment awareness. These small interventions compound into massive psychological shifts over time. But here's what makes this process particularly difficult. Your old trading identity fights back. The part of you that wants immediate results, that needs to be right, that craves excitement and action. This identity has been reinforced through years of reactive trading, and it doesn't surrender easily. You'll experience internal resistance every time you try to trade differently. Your mind will generate convincing reasons why you should abandon your rules just this once. Your emotions will intensify when you stick to your plan instead of chasing market movements. This resistance isn't failure. It's proof that you're changing fundamental neural patterns. The resistance peaks just before the breakthrough. When old patterns are dying and new patterns haven't fully formed, you exist in an uncomfortable transition space. You're no longer the trader you used to be, but you're not yet the trader you're becoming. This liminal space is where most traders quit, not realizing they're closer to transformation than they've ever been. Pushing through this transition requires understanding that growth feels unstable. Your familiar ways of thinking and reacting are being replaced by unfamiliar approaches that don't feel natural yet. What used to feel normal now feels wrong. What should feel right still feels foreign. This psychological disorientation is temporary, but it's intense. During this phase, external validation becomes crucial. You need evidence that the internal changes you're making are actually beneficial. But the evidence doesn't show up in your P&L immediately. It shows up in your sleep quality, in your stress levels, in your ability to stay present during market volatility, in your capacity to maintain perspective during both winning and losing streaks. These internal improvements precede external results by weeks or sometimes months. Most traders reverse course during this lag period because they're measuring the wrong variables. They're looking for immediate profit improvements when they should be tracking psychological improvements. The trader you wanted to become was always there, waiting beneath the noise of emotion and reaction. You just needed to learn how to listen. The blown accounts, the sleepless nights, the constant anxiety weren't failures. They were your education. Each setback carved neural pathways that eventually led you here, to this moment of understanding. You no longer need to fight your biology. You can work with it. You no longer need to control the market. You can respond to it. The transformation isn't dramatic. It's quiet, steady, profound. Like watching a river carve through stone, persistence shapes everything. Your relationship with uncertainty has fundamentally shifted. Where you once saw chaos, you now see information. Where you once felt panic, you now feel curiosity. Where you once needed to be right, you now choose to be profitable. This isn't about becoming emotionless. This is about becoming emotionally intelligent. The market hasn't changed. The same forces that destroyed your old accounts are still there, waiting to test every trader who walks through the door. But you're different now. You've developed the internal infrastructure that can handle whatever the market throws at you. Your nervous system has been retrained. Your neural pathways have been rewired. Your identity has evolved from someone who trades to someone who embodies the principles of profitable trading. This transformation runs deeper than strategy or technique. It's become part of who you are. Think about how far you've traveled, from reactive to responsive, from desperate to patient, from fighting the market to flowing with it. The distance between those two states isn't measured in time or profit. It's measured in awareness, in presence, in the quality of your decisions under pressure. The psychology that saved your trading wasn't about eliminating emotions. It was about understanding them, respecting them, and channeling them toward profitable outcomes. Fear became caution. Greed became appreciation. Frustration became fuel for improvement. You didn't suppress these forces. You transformed them. Your brain still activates when trades move against you. Your nervous system still responds to uncertainty. But now you have the tools to work with these responses instead of being controlled by them. You've learned the difference between reacting and responding. That difference is everything. The accounts you blew were not wasted money. They were tuition for the most important education you could receive, learning to master your own mind in the face of financial pressure. This skill extends far beyond trading. It touches every area of life where stress and decision-making intersect. You've discovered something that most traders never find. The market is not your opponent. It's your teacher. Every price movement is information. Every loss is feedback. Every win is a gift to be received with gratitude and managed with wisdom. This perspective transforms trading from warfare into meditation. The process continues. Neural rewiring doesn't have an endpoint. Each trading session is an opportunity to strengthen the pathways you've built. Each moment of awareness over reaction adds another layer of resilience. You're not maintaining discipline. You're expressing who you've become. Your future trading won't be perfect. You'll still make mistakes, feel emotions, and face uncertainty. But you'll do all of this from a place of centeredness that your old self couldn't have imagined. You'll stay present instead of projecting. You'll respond instead of reacting. You'll trust instead of controlling. The blown accounts are behind you not because you've learned to avoid losses, but because you've learned to manage them. You understand that preservation of capital is more important than generation of profit. You know that surviving today gives you the opportunity to thrive tomorrow. This patience is your superpower. You wanted control, but you found something better. Understanding. You wanted certainty, but you discovered something more valuable. Adaptability. You wanted to conquer the market, but you learned something more powerful. How to dance with it. The psychology that saved your trading is the same psychology that will carry you through every challenge ahead. Not just in markets, but in life. You've built something that can't be taken away by market crashes, economic uncertainty, or external circumstances. You've built unshakable inner stability. Your transformation ripples outward. The people around you notice the change, the calmness under pressure, the thoughtful responses instead of emotional reactions, the ability to stay present during chaos. Trading saved your psychology as much as psychology saved your trading. This is your new beginning, not as someone trying to extract money from markets, but as someone expressing mastery through disciplined action. The money will follow because you've become the type of person who naturally makes profitable decisions. Character creates results. Master the mind, and the market follows. This isn't just a trading principle, it's a life principle. Everything you've learned about managing internal state, working with uncertainty, and maintaining discipline applies to every meaningful challenge you'll face. Trading became your path to personal evolution. If this journey resonates with you, if you see yourself in this transformation, know that you're not alone. There's a community of traders who understand that the real work happens inside, who know that charts and indicators are just tools, but the mind is the ultimate instrument. Subscribe to continue this exploration. Let's rebuild how traders think, one mind at a time.